we're joined by guest Dambisa Moyo, author and economist. Dambisa, how are you?
I'm great, thank you. Thank you for having me. Glad to be here.
Good to see you again.
Thank you.
It seems like people here in Davos are coming around to Donald Trump. I mean, at first he was a pariah almost 2 years ago, and now it's like, wow, look at what this guy's done for the U.S. economy, and it's amazing. What is your take, personally, I guess, but in addition to that, the mood about people and their perspective of Donald Trump and Trumponomics?
Well, so first of all, one of the things I think is really interesting is that it feels that people are much more focused on risk mitigation this year than they were about upside economic growth. I think the president's speech a couple of days ago was sort of turned that a little bit on its head because he gave us all these statistics about what's going so well in the United States. I mean, it's a big year. I think people are fundamentally optimistic, and so now they're thinking about risk mitigation. Clearly, there have been some wins. I mean, you know, the unemployment numbers across different groups is something that the president has pointed to quite a bit. I was just at a lunch, people were talking about infrastructure being an area of weakness and where there still needs some improvement. But, I mean, look, you can't beat the fact that the U.S. is growing and unemployment numbers are very strong. Interest rates are still low. The mood music could change on a dime. I think people are a bit concerned that I think there's a couple of surveys about CEOs getting a little bit more concerned about the possibility of a recession. But fundamentally, I think people would say that the triggers for that might be a geopolitical shock or potentially an inflation surprise that we haven't factored into right now.
You know, climate change, of course, and sustainability, a big theme here this year. And I understand that you're on the board of Chevron.
Yes.
Fossil fuels have come under fire here, especially from Greta Thunberg, who specifically called them out, asking for business leaders to divest completely of these fossil fuel companies. Is it a zero-sum game? I mean, we were talking to Rob Capito of BlackRock yesterday, I believe, and he was explaining how a lot of these so-called offenders actually are innovating and doing good, and that you just can't cut them off like that. What's your feeling?
So, first of all, I was born and raised in Africa. There are a billion people on the planet who, to this day, do not have access to cost-effective and regular supply of energy. I was just home in Zambia over Christmas. Even my parents, who are relatively well off, do not have reliable electricity. And so the consequences of that for healthcare, for education, for the world that we want to see much more inclusive representation from other continents is damning if we end up switching off all the electricity, turn off the lights, so to speak. But more fundamentally, I think in many respects, it's quite infuriating for someone like myself because I sit in Chevron's board meetings and I know for a fact how challenged and how focused the business is on trying to find alternatives. We're invested across the stack. And not just Chevron, the energy industry in general is invested in biofuels, in battery, in water, and solar, et cetera. If there was an answer, that was cost effective and it could be done at scale, believe me, this is creative destruction. We would know it. We would know about it. I mean, there are 8 billion people on the planet. I can assure you that there's a big chunk of the population that is very heavily focused on trying to find an alternative. We have to rely on these companies because they are at the tip of the spear in terms of knowledge and expertise to help us find the answers. And so I think it's very short-sighted and actually, dare I say it, naive for people to be campaigning for defunding of these institutions that actually are really very knowledgeable around where we can potentially find solutions to the climate change crisis.
I want to ask you, Dambisa, about inequality, and I think we've talked about that before. With all the thinking that's brought to bear at places like Davos, it hasn't gotten any better. In fact, it's gotten, by some measures, a little worse, some measures a little bit better, I guess, in certain sectors and certain geographies. But we haven't made a big change. We haven't really moved the needle. Why is that, and what do you think we can do about it?
So, Andy, the problem is we have a suite of deep-seated structural problems that the global economy is dealing with. Income inequality is one of them. Natural resource scarcity in the environment is another. Technology and the risk of a jobless class, et cetera, et cetera. There's a whole list of these very deep-seated problems. The issue we have is that the only way we can solve these things is being being very actively long-term focused. These are problems that we can't just turn off, switch off or switch on the lights to solve. And specifically in the case of income inequality, the only answer is social mobility. So how do you get social mobility? You have to invest in education. You just have to. It's the only way they're going to see those kinds of transformations that we'd like to see. And the bottom line is people want a quick fix. They want universal basic income, massive cash transfers. I just don't believe that those are long-term solutions. And we have many examples, including my own continent of Africa, that has received multiple billions of dollars over many decades and has still struggled to generate economic growth.
When you see stories like about the family in Angola, the ruling family there, and the corruption, I mean, does that make you despair in terms of the possibility of change in Africa?
No, I'm actually fundamentally optimistic. I mean, there's work that needs to be done. I'm definitely inspired by a comment that I believe is attributed to Michael Bloomberg, where he said, ultimately, we need government to be data-driven. It has to be forward-leaning. They have to focus on measured outcomes, and there has to be no corruption. If you have these four things in government, you will have a winning situation. The problem in Africa, but also across the emerging world, and actually in the developed world as well, we have crony capitalism and we have a fundamental problem with corruption, and that needs to be stamped out. And I am fundamentally optimistic in Africa. The population is relatively young, and I think that the insurgence of the Chinese attitude in terms of building a large infrastructure projects, but also we've got a lot of young people who are very interested in the technological era. There's nothing to be pessimistic about. I think
Are you seeing a lot of foreign money flowing into the emerging markets right now? Because many of them, given the backdrop of the economy and low interest rates and the way the dollar is acting, they actually do see opportunity there.
Yeah, I mean, I think it would be a turn. As you know, in the last couple of years, there was a little bit less enthusiasm. I think a lot of people saw opportunities in private equity. There was a lot of money flooding back into more developed economies because it seemed to be much more stable. And there was a downdraft for sure in emerging markets. I think more and more we're hearing people talk about the possibility of maybe dipping their toes back into it. But, the growth rates remain very paltry in the emerging markets. And I think that's something that continues to be a turnoff.
The yield just isn't there.
Exactly.
Dambisa Moyo, economist and author. It was a pleasure.
Thank you for having me. Nice to see you.